It's Thursday, August the 11th, and you're back.
I
Welcome
am
back.
I am back. Missed being here.
Yes, that much.
No, I did.
Because you were in Montana, for goodness sakes.
I do love Montana and the West. EJ and Liz both filled in.
No, EJ was on vacation also.
So he was a double hit. She was a double hitter.
She was,
and I know she did a good job.
She did a great job. She
Yep.
did a great job.
No, she did a great job. Well, I am glad to be back. Now our heads are down. Yesterday's inflation number came in. It dropped a little bit. We do have inflation. Inflation's not at zero. It's at 8.5%, down from July's 9.1%.
Yep.
Don't get overexcited about it. The market has in the last 2 days. It is a drop. There's not enough information there to tell us whether the inflation is rolling over and what the Fed is doing. Charles Evans, the Fed president out of Chicago, gave a red flag warning, saying, look, guys, we still got a lot of work to do.
I mean, when you got inflation at 8.5%, and the Fed funds rate is 2.25%. That is a huge spread, and that means there's going to be a lot more movement upward as far as the Fed funds rates, which will impact inflation, hopefully bring it down, but at the same time, it's going to cause some disruption in the economy for sure.
Last week, before we left, we made a decision, and then here our able team made purchases of part of the cash into something a little different, but still in the safe, secure area of the Treasury bills.
Yeah, we bought some Treasury bills. In fact, we bought 25 million of Treasury bills. So we put a lot of cash to work last week.
And it was on a 6-month basis, as I recall, and communicating from Montana.
Yep.
Now, tell why. Because we bought 6 months corporate bonds, we bought 1-year corporate bonds, and now we bought a Treasury at a 6-month basis. Let's explain why we went Treasuries and why we went 6 months.
So what we found is that there was a real soft spot for the Treasuries, where you just looked at what the rates of return were for 1 month, 3 months, 6 months, 9 months, and 12, and we were getting paid, meaning you're going to get paid what we think is a very fair rate for just a 6-month period. And what happened with the Fed moving rates up, we expected to see yields on bonds jump. They did not. In fact, they went the opposite direction, because I think a lot of money is chasing corporate bonds.
Right.
And the Treasury bills, I mean, the difference in what they're paying is roughly about 100 basis points, but you only have to hold them for 6 months versus going a year. And we felt that was it was a very fair rate of return for a 6-month period, but then it gets money back into your portfolios after the maturity of those Treasury bills, and then we'll have to reevaluate and look for other opportunities. So we like having that money coming back into flow in 6 months.
All right, so let's give you the big picture at maybe 15,000 feet as we look down on it, so you sense what we're doing. Cash is still on hand. We're still looking on a weekly basis. Is there another offering in this fixed income world in a 6 or 1 year basis that would make sense? We know stocks are on sale. We have a list of companies that we want to buy. We are going to buy. They're primarily dividend oriented, but growth in especially some of the tech areas are some really good buys. So we're waiting for buys there. We think, and we still believe, a recession. We're already in a recession, so we got to work through that with continued rising interest rates with the Fed here in September. So all of that says to us to be cautious, not to go too far into the stock market, have cash on hand ready to make buys, and look for fixed income opportunities. So over the next 12 months, we can ride on a hopefully little up trajectory, but we have created stability within the portfolio, looking for that time when the market does roll over, and then we have money coming due, and we can buy into the market, and we'll come out of this.
That is the plan.
So that's where we are. If you have any questions, please call us. We are working hard to figure out the best way to navigate this for you, and we do it because we know it is your money.
And your money matters.
We'll see you next week.